I have people who have 800, 900, 1,500 doors, and I'm like, I'm not exaggerating the numbers.
Yep.
The way that you do that at that time is only by doing joint ventures. You got to start raising capital because you're not going to be able to do it on your own.
Hi everyone, and welcome to the NK Real Talk. Today I got Jas Takhar here. This guy is a gem, and thanks for coming.
I appreciate being here, brother. Thank you for having me.
Thank you. So this guy is the reason why I'm doing videos. I walk into his office one day wanting to ask a question. Next thing I know, I'm doing podcasts and videos with him. I don't even know how that happened because then the entire 40 minutes.
I was gonna say you could blame me for all the places you get to see Nima now. So, but brother, you're doing an amazing job. I told you back then, and I'll say it now that your energy, your smile, your positivity, we need so much more of that, not only in the real estate industry, but just in life, man. You know, obviously there's a lot of negativity out there, but fuck, you ever bring a lot of energy, and I know your viewers and listeners appreciate it, and I hope some of my community, because as I share this episode as well, that they come over and start to watch all your stuff, because you guys do so much content, and you are all over the place now in a good way, and so I think you just need to keep going. That's it.
Thank you. Yeah, no, I remember when I started, it was a disaster, but it was good now. It's good now. So, what I want to talk to you about today is, well, Jas Takhar is an agent. He's your ranking in royalty page, you're all the way up there. What are you, number 2, number 1?
Last year in 2022, we finished number 2 for units and number 2 for GCI, which is like
that is massive.
Yeah, that's pretty cool.
That is massive. That's among.
I do it all by myself. I don't have anybody.
Yeah, he
no,
just
I'm
runs
playing. We have one of the best support teams in any business, like not just only in real estate, and I really get to stand on the shoulders of giants, and I get to do stuff like this. That's pretty cool, and get to meet people like yourself and get to really know people like you. But the team is working hard. That's for sure.
Amazing. Yeah. So you run a pretty big team, and what I want to talk to you about is what you focus on, because not like an average real estate agent right here that we do a lot of resale or commercial. You mainly focus on investors, and I've been with a group of investors, you know, talking to a lot of them, but that's not the main focus of majority of the realtors. How did you get into that to begin with?
Well, first and foremost, I actually got into real estate 19 years ago with the sole purpose of learning how to invest into real estate.
Right.
I actually thought getting the licensing was going to teach me how to invest into real estate. I was probably 22, 23 years of age back then. And so then you quickly learn that's not what it's for, the licensing. And I then, like yourself and a lot of realtors in the GTA and in our country, started working with like traditional real estate, right? Helping home buyers, home sellers. But then about a decade ago, we just realized that there was this white space that was out there. There's this opportunity where you can help people create wealth. Obviously, we wanted to do that for ourselves. And so we were already investing into real estate, not by like massive in the billions of dollars by any stretch of the imagination, but we were looking at income properties, multiplexes. We were doing some land development, and then obviously the pre-construction condo space started to open up in our city of Toronto. So we started to focus in on that as well. And then look, we mentioned it to a client, and they're like, well, we have a property already. We wouldn't mind actually renting out another property. How can we do that? And then we just start to build out our network, just like anything else. Like we were talking really quickly about content. You get started, it starts to snowball. And then like I mentioned, last 10 years, I'm gonna say about 80% of our business, 75% for sure, of our business is with investors solely.
Amazing. And the majority of these investors, what do they buy?
Well, it's a myriad of things, Nima, depending on the market, right?
Yeah.
And so I would say it goes anywhere from a land development deal, so where they actually partner up with the developer, okay? Where, for example, for your viewers and listeners, if they don't know, when there's like a 300 unit condo being built, before that gets built, the land is acquired by a developer. Now, that developer, just like regular Joes and Janes like us, they don't want to put that 100% down themselves. They're gonna leverage. So they're gonna put down 20% of their money and then get the rest of the money from, for example, private lenders or someone at the bank. That 20% though, even that they're gonna put down, they don't even want that to be their own money. They allow other investors to pool their money. So starting with a land development, then going into actually owning a unit, one of the 300 units in that example, then going into an income property. I call it the Brampton special. There's a unit upstairs and there's a unit downstairs. They're all over the city of Toronto, Durham, Pickering, all that kind of stuff. And then we go into multiplexes. We probably cap off at anything with about 25 doors and above. So an apartment, anything that has 24 doors, 24 units in a building, 25 units, sorry, we just deem that as an apartment building, and then we just refer that out to someone else.
Okay,
so
that's
it's a
where you
myriad
cap
of
it,
all
yeah.
of them, man. That's like that whole menu, so to speak.
That's amazing. So that's to get a background of where you're coming from. You yourself, where do you invest?
So I invest, 98% of my investments are in the GTA.
Right.
And the reason that is because I'm born here, I'm raised here, I do, 90% of my clients' investments are here. I say 98% because I do own a property in Orlando. Okay, that's an Airbnb.
Nice.
And so it's actually being built in the next, I close on it in 3 weeks from
Disney?
now. 8-minute drive or 10-minute drive to Disney. I haven't even seen it. I haven't been there. I purchased one there for your realtor database, like the listeners and viewers. Like the power of when you buy something, and if you have a nice database of people who trust you. I bought one. 24 other of my clients ended up buying in the same project. So that's my one property outside of the GTA, and the reason being is I look at the facts, right? I'm not a fortune teller. I can't be Nostradamus. I can't tell the future. But what I can do is look back and say, okay, in the last 100 years, every decade, every 10 years on average, values have doubled. I know how many people are coming in, and we'll probably get into the nitty gritty of the numbers at some point as well. But knowing that many people are coming into the country, and when they come into the country, they want to be in the GTA. That's why I do majority of my investments.
And what are they? Mostly like residential single dwelling?
Mine's are all condos right now.
Condos,
Yeah, right
amazing.
now mine are condos. I bought not all of them in the pre-construction stage, but majority of mine. So I have 11 doors right now, and 6 of them I bought in the pre-construction stage. And that is not right for everyone. Okay, for me, because of the organization I run, I have a couple of organizations that I started in terms of businesses. I'm busy, so it's hard for me. And like even putting up this art, I'm not a handy guy. I can't do that. The team knows don't put a hammer in my hands, right? So I'm not going to be somebody who's going to be able to fix and flip stuff, right? I also don't have enough time to manage a lot of contractors. So I do the boring stuff. I like the pre-construction, and then just get me a condo, a 1-bedroom, a 2-bedroom in downtown Toronto. I'll rent it out. And yeah, sometimes the cash flow is not, as comparable on a multiplex or an income property. But for me, it's just easier. I deal with the one tenant. Again, I really want to stress to people who are watching and listening right now that are thinking about getting into investing into real estate, that maybe have a bunch of doors. Not every strategy is for everyone. I think there's pros, like benefits to every single strategy, and there's things that you always need to consider. I think what you do a great job of, and your team does a great job, is that you always tell people both sides. It's like, I watch your content, man. Like I obviously know a lot more just than your content about your business because we're colleagues, but you guys do such a great job in showcasing, hey, like, here's some advantages of doing an assignment, doing a pre-construction, doing an income property, but also understand that you need to consider these things and then let the people make a decision themselves.
100%. No, that's so true because every investment you make, there's a risk associated with it. And that goes with real estate. And I think with real estate, it could be less because if you're holding it long term, that risk kind of diminishes, especially if you're not flipping it right away.
In fact, the longer that you hold on to it, the better the return's going to be,
100%,
right? Yeah,
100%. And we're going to go through that as well. But walk me through the process of evaluating any investment you make, depending on which road you want to take. Let's just talk about if you're buying a condo investment. Let's just take that as an example. How do you go about picking that property or investment?
Well, so I do the same thing with my clients that I've been doing for myself. Now I'm a little bit more risk riskier with my own money, because at the end of the day, I don't want to play with other people's money from a risk perspective, right? Again, going back to talking about the benefits and the things that you need to consider. But I'm always looking at is the location, number one. It's the old adage, it's boring. That's not going to be the sexy clip necessarily that we take out of this podcast today, but it's location, location, location for a reason, okay? The only difference when you're looking at a pre-construction that's a little bit more important than location, location, location is timing, timing, timing. You got to buy at the first access of pricing, or maybe at the end when the developer's releasing some of their last few units, because they're willing to give you a bunch of incentives.
And we're talking about pre-construction.
That's
right
pre-construction
now.
specifically. Yeah. But overall, I'm looking at the location. And when I'm looking at the location, I want to be close to a major transit line. There's a study done back in 2000, I think it was 17 by Harvard. And what they looked at is that what happens to real estate values as well as the rentability. Rentability meaning like how much did the rents go up by? How long does it stay vacant? How many people are looking at the property? If you're under 500 meters, the 500 meter radius of a major transit line, not like just a regular bus line. So for here in the Greater Toronto area, really anywhere in North America, can you get close to a subway? Because especially in Toronto, they're not building any more subway, like underground subways, right? And so if I can get under 500 meter radius, the values based on this study jump the highest, and the rentability is the highest under that 500 meter radius. That's number one. Number two, I'm looking at population growth, like how many people are actually moving into that area? What's the numbers like? Is there going to be people actually wanting to rent? And then I'm looking at job growth, like is there jobs, right? Hence why I love GTA. For all the negative that we can talk about when it comes to Toronto, and God knows there's a lot, okay? Transit being I think the number one problem here. You have amazing, amazing people coming in, hardworking people coming in, the job growth, our tech sector. I mean, Toronto really, for your out of country listeners, people think we're the capital. We're not the capital of the country, but I like to think we are. We're definitely the financial heartbeat of this country. We have all the major schools here, all the major hospitals here, our restaurant lounge scene. Yeah, okay, maybe it's not New York or London or Paris, but damn, it's one of the best in the country. Montreal is nice, but I mean, you compare it to Toronto, look at our restaurants, our lounges, all that. And then, like I said, the tech sector, last time I checked, and maybe somebody can fact check me at some point, the tech sector in Toronto is actually outpacing Silicon Valley.
Really, yeah?
Right? And so this was like literally up to last end of 2022. Okay, so just of this time of the recording, we're summer of 2023, that might have changed. But you also have number one in the world with the amount of cranes that are coming up. So there's a lot of action happening here, right? There's a lot of development. Now, for your viewers and listeners, I don't have anything past a high school education. I mentioned that, Nima, because I'm not that smart. But you know what I realized really, really early as an investor? I'm going to follow where the big money is. So when I see the big real estate institution, like the REITs, okay, a real estate investment trust, when I see Walmart's popping up, when I see Starbucks popping up, they got massive research and development teams, right? Like hundreds of millions of dollars. You know that they have figured that out. When's the last time we've seen a Walmart or a Starbucks close? It happens. It happens. Very, very rare, right? Because they know when they're going to plant themselves into an area, they're not thinking about flipping this thing in 5 years. They're thinking like 4 or 5 decades out. Walmart for sure. Yeah. Starbucks has to be in and around the decade to 2 decades. That brings me to my overall thesis about investing in real estate. Different than mutual funds, stocks, Forex, crypto, Bitcoin, different than all that. I'm looking at it from being a decade trader. So I won't invest into real estate, into any property, unless I've already put it through the filter of 10 years. Because again, in the GTA, it's a big sample size, right? And real estate, we're going through it right now. We're going through this little blip in values. Rates have gone up. But I've been in the market for coming up to 2 decades. At the end of this year, it'll be exactly 20 years that I've been a licensed real estate agent in the market full time. I've seen these dips happen before. It's quite easy to explain, actually. When the rates go up, Nobody really can buy now as much. More people are like, you know what, honey, let's not buy. So then values come down. But the second rates come down, values shoot up. We've seen this, and this is going to happen
It's
over.
shoot up even crazier.
I think so, because the one thing that we've never really solved for in our city is the amount of people coming in, and we can't build.
Yeah.
Right, that's the problem here. Right. I shouldn't say we can't build.
Can't build fast enough.
Exactly. And the cities, with the Greenbelt legislation, they're not allowing us to, right? So with that said, I'm a big believer of being a decade trader, not a day trader when it comes to real estate.
That's the biggest factor in investing in anything, and that's why when people ask me, okay, you know what, if this is a good deal, can I flip it? I'm like, flipping in any market is risky, because when it's going up, it's fun and dandy, but like we've seen it happen last year. People bought September, October, November wanting to flip a property. They hit May, and they couldn't even get what they paid for the property originally, and they've invested like $500,000 into it. So that is why, first of all, you got to be aware of when the prices are going up 10% a month, there's something wrong there. You got to watch out. And when the market is like this and you want to flip, you got to also watch out for the fact that you're buying something at, let's say, $1 million. Now you're going to flip it for 1.5, 1.6. At that 1.5, 1.6, not a lot of people can afford it. So are you able to hold on to it for 2, 3, 4 months before selling? Because a lot of people get private loans. So these are a few things in each category you're investing, because this is related to flipping, but if someone's buying a condo, then it's a long term. You've got to be renting it out. So you got to watch out how much down payment you're putting, so that is it going to cash flow positive, negative, and if it's going to be negative, are you going to be able to carry that forward? Because we've had it this year, and I think a lot of realtors had it this year, that people who had condos were getting out of them because they were simply cash flow negative, and they're like, you know what, maybe in 1 month I can afford $1,000 a month, $2,000 next month, but am I gonna afford this for a year, 2 years? And that's when people panic and start selling. And we've seen this example like in the last few months, a bunch of condos, especially since June. Prior to June, something sold, let's just say around 535. Same condo right now, literally same condo, 2 floors down, sold for like $499, right? Why? Like in 2 months, the prices haven't dropped that much. This is just a blip in the market, because people are like waiting and see, because as soon as you have a rate increase, there's usually about 60 to 90 days for people to adjust to see what's going on. So no one's going to pull the trigger to buy. And in my opinion, that's when you can, like, if you know the market, you should buy, because that's where the opportunities are.
Well, I mean, times like this present a lot of compelling buying opportunities, but it's not for the faint at heart, right? And so not everyone should be looking into investing into real estate now. I think actually majority of people should be putting their hands in their pockets and not spending any money, not only necessarily with real estate, but in a lot of areas, right? Like, this is not the time definitely to look at any type of liabilities. Like, if you were thinking about purchasing or leasing an expensive car, maybe now's not the time to do it, right? For majority of people, not everyone, for majority of people. Why? Because we don't know what's gonna still end up happening for the next 6 months that are left in this year, 5 months that are left in this year. And so what I would highly recommend, though, if you're someone who is prudent in terms of that they've saved cash before, maybe you have capital underneath the pillow or the mattress right now, you might be someone that wants to take advantage of these compelling buying opportunities. They're going to show up. They're already, like you just said, a condo selling for $535, and now somebody's letting it go for $499, right? Like, that's going to start to show up a lot more. It's those people that have money ready to go. And so for me, I've been sitting on the sidelines now for the last 16, 17 months, not because I knew something about the market. I'm not going to lie to say that I knew that this was going to end up happening by any means. I had to put some money into some of my businesses. I started a new business, so I wanted to make sure I had some cushion. But what good came out of that is the fact that I still have a little bit of capital now sitting. I actually refinanced my property exactly 16 months ago. And so it wasn't really at the peak of the market, but close enough. And the money's just sitting there now. So once I start to see opportunities like that, I'm going to jump. I am going to jump on something like that. I might even look at a pre-construction condo, which a lot of people are like, you're crazy. Why would you do a pre-construction condo? Well, for me, if I buy something today that's going to close in 4 years from now, well, I have a little spidey sense that tells me that there's a very good chance that the rates are going to be a lot less. Are they going back to, there's
2%,
nonsense like, no, there's not going back to that. Those are gone.
We had as low as 1.3, I remember.
Well, there's one that was 1.99. There was like
That was
a
a fixed one.
promotional,
That was a
yeah, it was a
fixed, yeah.
fixed one, right? So
Yeah.
forget that. I like to see the rates in and around that 3.5 to 4.5. Call it
Yeah.
4%.
Yeah.
I think that's healthy.
That's
My
what-
first property, Nima, was in 2008. Sorry, I got married in 2008. First property was 2006. It was a 4.5, 5-year fixed. We bought 3 houses at that time. I have 2 older brothers, right? So we each bought a home. We left the bank, Nima, and we thought we robbed it. We were like, holy crap, 4.5% on a 5-year fix. This is awesome. Why? Because it just came down from 6%,
Yeah.
right? So for our age group, this rate, like, I mean, a 5-year fix right now is, what are we at right now? Like 5.5% maybe?
I think it's around 6. Yeah.
Around 6? Okay. That is, I wouldn't call that normal. I think what's normal is around that 5%. It's the younger generation that is like, what the hell is this, right? But when you compare to 11, 14, 18% mortgages that we've seen in the past, it's actually not that bad. It's not that bad. I understand that values have gone up, but now you're starting to see them creep down. But you said a good point earlier. The second, in my opinion as well, that the Bank of Canada either says that they're not going to change the rate, or if they decrease the rate, maybe not in the next announcement, but by the end of 2023, even if they have a neutral and they don't make a change, values are going to shoot right up because there's a bunch of people waiting on the sidelines right now. These are real conversations that people have. Honey, let's wait, see what happens, and then the second that there's no that the announcement is that they're not going to change the rates, you see everybody come back out again.
Let's talk about the fact that January they said they're going to hold the rates. And this is that I was talking actually to Chris about. No one talked about this fact that since January all the way to the end of May, Toronto prices, we're talking about 416, shot up 21%. From January to May, that's like 5 months, that's like 4% per month that it went up. No one talked about the fact that, listen, in January, dead of the market, you should have bought and you were still waited, and things went up, and we saw what happened in May. June, they increased the rates, things slowed down, July, and it's going to be like that till we see what happens in September. It's tough to say where the market is going to go, but is it going to stay like this for the next 5 years? Highly likely.
In terms of the rates, are you saying?
No, in terms of the market being like this.
No, I don't think so.
These opportunities that we see out there right now, you got to think about the fact that if you're buying anything, condo, detached, whatever it is, will it be in this scenario that we are right now? Because this is a pretty extreme scenario, and we won't see things like rates like this again, rising this rapid, because this is not normal what we've had in the last 12 months. So if you're in the market to invest, now is the opportunity, because everyone talks about, oh, I want to get a deal. These are the deals we're looking at.
As long as you're going to do it long term.
100%.
Right?
You're not buying anything, in my opinion, real estate is not a day trade. You're not buying and flipping it. By all means, when the market was crazy back in 2021, 2022, you would have bought something 3 months later, you would have sold it, made a couple $100,000, but that's not normal. In a normal market, you got to be buying, in my opinion, at least 5 years, right? After the 3rd year, if it's good, sell it, but be prepared to own it for 5 years before, you get rid of it.
Well, and even to that point, brother, I push people so much to say, look, why don't you just look at buying this forever? Like, just hold on to it forever, because what you can start to do is to use that home as an ATM. You literally can use the home as an ATM. You go back to it every 3 to 5 years, okay, depending on what's happening in the market, and you refinance, pull out equity, and then go buy more. Now, quick caveat, in Canada, it's the only legal way not to pay taxes.
So that was actually my question for you. How do you go about financing? So this is one of the strategies,
So
right?
this is actually probably the strategy.
Right.
So in terms of when I buy any property, even when it's a pre-construction, I'm going to close on the pre-construction. I'll wait a year, okay? Because I know after a year, there's more lenders are going to open up to give me the refinance, okay? There is a couple of lenders that within like the day after you close to the 6-month period on a new property, a new condo, they'll actually refinance it for you, but there's not many. So I want more options, right?
And while we're in the same topic, that's when you see the most appreciation in any pre-construction, because at the beginning, a lot of people are trying to assign, and then when they close, a lot of people try to unload, and the supply is high, and your prices are
And
like,
your appraisal value when you go get that refi is going to be a lot lower. So
100%.
that's why I wait usually a year, because the actual dust clears of the condo building, but also that financial dust that you're talking about. You're no longer a commodity in the marketplace. There's not as many people that are listed, right? And so I will refinance. I'm trying to get whatever I put into the property. Okay, and then I take that money and then I put it into another one. Now, with the caveat that I was talking about, the legal way not to pay taxes in Canada, that's obviously the number one way not to pay tax when it comes to making sure that you don't sell the property. But what I also like about that fact is that as long as I have that long-term kind of mindset around the property, I know, and the location that I bought it in, I know I'm going to be able to consistently rent it out.
Yeah, so that's the key. So that's the financing portion that I think a lot of people should take advantage of, because if you start cash flowing positive on it, you're going to be paying taxes on it too. So if you're not counting on that money and you want to just grow the wealth, that's the way to do it.
And then, the other obstacle that you'll come and hit at some point when you get to a certain amount of doors, some lenders are at 5 doors, some are at 6, some will be at 15 or 18, is the fact that even you won't be able to refi, you won't be able to get a mortgage on your own. And so what I highly, highly recommend to people is to start to do joint ventures. That's another way to get around the financing. So,
and to explain joint venture?
Yeah, really easy. It's myself and you buying a property together, and sometimes the situation's a little different, right? So for example, I might have the capital, but I'm not able to get the financing because I have too many doors. So I say, Nima, you want to be a partner with me on this, buddy? Look, I already put in the money. Do you want to get the financing? Now, most people would jump on that opportunity if they're in Nima's seat, because it's like, okay, I don't got to put any money down and you just need my ability to get the financing. So most people are going to jump on that. Now, I probably wouldn't offer you 50%. I would say I'll give you 25% of the deal. Right? And so if you're going to bring money to the table as well, now we can talk about doing 50-50, because I already put in 50% of the money, but I also am the one who brought the deal to the table.
Right.
So at the end of the day, a joint venture is just partners buying real estate together. Very, very common. In fact, once you want to start to grow your portfolio and I have people who have 800, 900, 1,500 doors, and I'm not exaggerating the numbers.
Yep.
The way that you do that at that time is only by doing joint ventures. You got to start raising capital, because you're not going to be able to do it on your own.
Yeah, and those are big apartment buildings most likely. I don't think those are single condos.
No, those are not single condos. Yeah. Those are now you're getting into 15-door multiplexes, 18. The other way to scale as well is when you go from 5 doors in a building and above, the financing changes, because the lender is no longer looking at you as the applicant on its own.
Portfolio.
They're actually looking at the portfolio, but also what is the rental income that the building's bringing in. And so they put a lot more weight on the rental income and how the building is performing rather than just you as the applicant.
And the cutoff for that, what is it? 5?
5. It's 5. It's 5 doors and above.
5 and above.
5.
Okay.
So if it's a 4-plex, for example, it's all on you.
Okay, so that's what it is. So that's amazing. So that's a good way to go about just increasing the wealth and being able to still buy, just leverage it with other people that don't have as many properties.
100%. And multiplexes are amazing, man. Again, it comes down to location, but it's economies of scale, right? And what I mean by that is that you have one furnace to deal with, right? You have a common area for laundry and parking and all that. But the best thing is let's take 5 doors in a building. When one tenant leaves, you still got 4 units.
That's the
right?
biggest.
So that's huge, right? And so you gotta weigh your options. People are like, "What's better?" I'm like, "I don't know. You like chocolate or vanilla ice cream, right?"
Yeah.
Because you gotta see what's gonna fit better for your lifestyle as well as in your portfolio. Yeah. I'm a massive believer that I personally think real estate is one of the best investments in the world. It's not because I'm a real estate agent. I just bring me other things, and I'm going to look at that. I'm an investor, but real estate just allows you to do a lot of stuff, right? Yeah. You can live in it, you can rent it out, and then when you, as an investor, you can leverage. You don't have to come up with the full 100% down yourself. I think the best thing, though, is the fact that we're not building any more of it. There's only so much land, right? Yeah. It looks like it here in the GTA when you drive on the highways or you drive up north, but they're not buildable. They're not buildable, man. I like that word, by the way.
Yeah. Well, the whole thing is that's the number one thing people need: shelter. I mean, let's say you getting into stocks, Bitcoin, whatever it is, it leads to you having to first own a property. You got to live somewhere. Even if you want to rent, You still gotta live somewhere. So that's why the need is always there. You can't be like, okay, you know what, I gotta go tent somewhere. Most likely, no, it's not gonna happen. So that's why the need is there, and that's why it makes it safe. 100%. Sometimes it gets out of proportion with the fact that prices go crazy where they shouldn't, and that's because of speculation. But again, the demand is there. So when you have this many properties, how do you go about managing them? Because I know a lot of people don't want to deal with the headache of tenants, especially right now in Ontario. It's a headache. Like, I deal with so many landlords that they're just fed up. Like, they'd rather keep their property empty than to have to deal with a non-paying tenant or the headaches that come with it because you can't do anything.
I completely understand it. I'm in the business, right? Like, I have a team. I have obviously a chief of staff here at work, so kind of slash my assistant. Yeah. My wife right now currently is not working. She's a stay-at-home mother, and so she helps with that as well. So I don't have a property manager at all, except for the one that's coming to close in Orlando, because I can't get to it, right? So for me, because it's a condo, because they're newer condos, you know what happens with these things, Nima? You know this, right? But for your viewers and listeners, the light fixture goes out, or the toilet breaks. I'm not going to fix the toilet myself, but I go on this site called Google, and I just Google plumbers, and I call somebody, and I get it fixed. Half the time, actually more than half the time.
Or your clients will call you.
I was going to say, my tenants call me. My tenants say the toilet's broken. I'm like, great. Actually, I have an email right now. It's not a toilet, it's a dishwasher. Yeah. And the tenant said to me, Jas, I got 2 quotes. Which one did you want to go with? I'm like, did you meet with these people? He's like, I spoke with both of them. They're very nice. I was like, go with the less expensive one. He's like, great. He's getting the dishwasher, taking care of everything. I could just send me the invoice. I'll pay for it. Yeah. Done. Very easy. Now, for most people, to your point though, I completely understand. A lot of people are like, I don't want to deal with the tenants and the toilets. I get it. There's property managers. Just make sure that you put that into your numbers. You budget for it. I would say 10%. Okay, some would say 8 to 10. Just go 10%. Yeah. Just go 10%. Put that in your pro forma and make sure that you budget for it, because here's the other thing. Because I'm in the business, it's a lot easier for me, but you want to get to a place where you're not managing these properties, because then it's actually truly passive, and obviously there's residual to it because it happens every single month, but the passiveness to it is what I think the dream people are looking for and the freedom people are looking for. So just, even if you're going to manage the property yourself at the start, budget the 10% now. Like, make sure you're proactive around that. And there's property managers right across the country, right across the world. It doesn't matter where you invest into, you can find a property manager. And look, if you want to, I personally though would, if it's your first time, do it yourself. And the reason is because when you hire a property manager, you want to make sure that he or she is doing the right thing. Yeah. They're doing the job right. You won't know if they're doing the job right unless you've done it yourself.
Is there a sweet spot where people should start looking into a property manager?
Look, I mean, it depends on who you are, right? Some people love like, they're really good at customer service. They like hanging stuff. They're handies, right? And like, they're handy people, right? And so I would say, in terms of a sweet spot, budget for it right away.
We're talking about someone that's got a full-time job, right? And you can attend 24/7 to deals like this.
Then do it right from the start.
Right.
Do it right from the start.
One property.
One property. Do it right from the start. There's nothing wrong with that. Even if it's only one door, it's just a condo.
Right.
It's hard for me to say that because I know how easy it is when you own a condo. Yeah. Like, there's just not much. There's a property manager in the building, and there's sometimes a concierge as well that can help you do a lot of stuff. Yeah. With technology, it's so much easier now. But you own a property that has 2 doors, and it's a home, like a detached or a semi-detached, because there's a roof and a furnace and windows and all that kind of stuff. Just get it done from the start.
So this is why I love condos, because a lot of
I thought you were going to say this is why I love you.
Well, I love you anyways, but like, that's besides the point. Why I love condos is because a lot of our investors, we got them pre-construction. And this is why I say, if you're buying pre-construction, you definitely want to rent it out at least for 2 years, because first of all, the first year, everything is covered. Like, you don't even have to worry about anything. Like, even your appliances are covered. Anything breaks down, you call the builder, they have to come back and fix you. They don't come back, you got Terrian at the backup. But second year, you got a bunch of other stuff, water penetration, like plumbing, everything is fixed. And up to 5 years, major structural, which in condo, it's irrelevant.
So rare.
So that's why when you're buying a new condo, for the first couple of years, there are no issues. And if there was something faulty, it's fixed right there. usually from what I see, most new condos, you're hands free for the first 7 years. Like, I mean, unless, fridge goes out or something drastic happens, I haven't seen much maintenance or management being
I
needed.
have three, I mean, great point, Nima. I have 3 condos that I'm thinking of right now that are 14, 15 years plus. Like,
And,
the only downside, in full transparency, is because they're 14, 15 years plus, the rental guidelines apply to me, right? Like, I can't increase the rent to whatever I want. Other than that, nothing major has happened with these things. I haven't even done a major renovation to the place. Like, I might have.
Which
I
condos
changed
are
the
those?
dishwasher. I have 2 at Stafford Street, so 15 Stafford, right across Stanley Park. I actually lived in one of those myself. And the other one's not even 15 years old now. It's probably closer to 8 years old, is in River City 1.
Oh, no way.
So, I mean, we own in River City 1,
That's
3,
32
and 4.
Oh, wow.
32 Trolley.
50.
River City 3 works on, I mean, address is on Bayview.
Bayview, yeah,
And then they didn't call it River City 4, they called it Harris Square. It was really
Harris
River
Square,
City
the
4.
black
Yeah,
one
the
next
black
to
one. Beautiful building.
All those buildings are nice.
well-
And my favorite is the River City 3.
Oh,
cube
that's
sticking out.
I call it the Tetris building.
Yeah.
You call it, yeah. It's funny about that, buddy, because River City 1, the first phase, was being sold at $500 a square foot. Okay, $450 to $500 a square
And
foot.
who wanted to live there?
Nobody. It was like a Western movie, like with the tumbleweeds. There's nothing there. Go there now; it's beautiful, right? We used to tell people there's going to be an underbridge park.
Yeah.
They're like, "What the hell is an
What are you talking
underbridge
about?
park?"
Yeah,
Right?
look at it now.
And there's going to be this man-made park, beautiful man-made
Yeah.
park. Anyways, $450 to $500 a square feet, and I'm telling people to buy in River City 2 because I know River City 3 and 4 is coming. I also know that they're going to be building more condos in that area. People are like, no way, now River City 2 jumped to like $550 a square
Yeah.
foot. River City 3, you can check the numbers, $700.50 square feet, $758 price per square foot. Everyone thought I was on crack when I'm like, you got to buy River City 4 too. Like, you should. And they're like $850 a square foot. Get out of here! Now you and I know downtown Toronto on a new building, you're looking at $1,400 to $1,600
Right
all
now,
day
River
long.
City is hovering at 1,000 in this
on
market.
a resale.
On a resale.
On a
Yeah,
resale.
on a resale.
Exactly, right? And so, I mean, why am I saying that? Because over time, you don't need to be that smart in real estate. It's going to do one thing. It's going to go up. It's going to go down. It's going to keep on going upwards, though. So it goes up and down, upwards. You just got to hold on for the ride.
That's the
all.
whole thing. Yeah,
That's
like
all.
don't get fixated on the short term. Zoom out, see what happens in a year, 2 year, 3 year. Because going right now before COVID,
Yeah.
like prices where they were, they started to go crazy in February of 2020, and things came down during COVID. Literally it took like 10 months after to surpass the craziness at the beginning of 2020. So again, like at that point, you may say, listen, I overpaid for something, but like in the bigger scheme of things, you're owning something right now, and that's going to appreciate. So don't look at it, don't be fixated at that moment in time. And a lot of times, like I see people say, oh, you know what, I lost about 200,000, $500,000 on my house. I'm like, how did you lose that? It's like, oh, when I bought it, now the values have come down I bought it last year for this much, now I'm like down 300,000. I'm like, have you sold? No, you haven't. You're living there, you're gonna be there for another 5 years, so see what happens at the end of it. Like right now, you haven't sold it to realize the loss. So, and people let that get into their head, because I know a lot of people that have the capital still to invest, and they're like, oh my God, I bought at the beginning of 2022 when the market was crazy, and now I'm not buying real estate anymore. With these rates, it's gonna go further down, I'm gonna go into recession. I'm like, you're getting 1 million people into Canada. Where are they gonna live? I mean, like you and I know right now the rental market is crazy. And the amount of people that we get application from that just entered Canada is nuts. I would say majority of them, like at least 60 to 70% in Toronto that we're getting. Good luck having a house right now, and all the applications you get are from people with work visa. Everyone.
And,
there's like 2 or
and they're
3
making
people.
good money.
Oh yeah.
And they're
All of
making
them,
good
yeah.
money.
All,
You said 1 million people. I don't know if you've seen the most recent stat, which is that it's going to go, in 25 years, our country's going to double.
25 years.
Okay?
That's
now people might
crazy.
say, well, you're talking about 25 years. I know, but just put it into context for a second. We have 35 million people, I think, here, 33 to 35 million. That's going to double. Okay, so that's going to get to 66 to 70 million people in the next 25 years. What took us 150 years is now only going to take us 25 years to get there. Where are they going to live?
Yeah. What's the population right now?
I would say in Canada,
Yeah.
I would say about 33 to 35 million.
Are we around 30, 35? Yeah, okay. So at the beginning of 2002, what was it, like 2002, I think we were hitting like around 30 million. So right now we're about like 21 year span, it's gone up by, let's just say, even like 5 million.
38.2. This is 38 million in 2021. Sorry to cut you off.
So I think we hit 40 million. I think
You're probably at 40.
Yeah,
There you
we're
go.
40. So
Yeah.
in the last 22 years, it took us to get to 10 million. It increased by 10 million to 40. Now imagine in 25 years, it's going to be double and a half
Yes.
of that.
Well, they're saying in 25 years, you're going to have double what we have now. So we're going to have 80 million people here.
And look at what condos were back then, because I remember back then, like, you would buy a condo pre-construction. I bought one at Yonge and Eglinton, like 200,000. And same condo right now is hovering at about 750.
But see, Matt, and so that one right now, today, you're saying hovering at 750.
50. Well, that was 2007. That wasn't even like 2000. Like, that was 2007. Like,
when you bought it.
Yeah.
No. I'm saying now it's 750.
Yeah.
In 2022, February, peak, did it hit 850 maybe, do you think?
Probably was, yeah, around like
850.
Yeah.
To your point earlier, if you were really crazy, like some people, not everyone who's watching or listening, you'd be like, I lost 100 grand.
Yeah.
But you bought it for 200. You actually, like, you're up
That
550,
is
bro.
exactly. You cannot time the market. That's why people get it in their head.
Yeah.
That, you know what? Oh, I could have sold them. You didn't even know it was until that moment passes. You don't know that was the peak. Until the moment passes, like January, you didn't know that was the bottom.
And I actually think, and here's the thing, right? And it's funny, because I don't know if I've ever really said this on videos and stuff like that.
It's going to be the first one.
Yeah, it's a hot one. You could be those people, and I'm saying not you, but like you can be those people that are like, real estate's bad and it's not going to work. There's nothing wrong with that. Like, nothing wrong with that. Like, I'm actually okay with it now. You know what I mean? Because I also know there's a bunch of people who are like, are you crazy? This is the time. Like, I'm going to buy this at a much less price than I could have in the past. I'm going to hold on to the thing. I'm going to refinance it. Now, the people who are like, real estate's not good, and you can dog the people that own these properties, but we live in a capitalist country.
Yeah.
It is what it is, right? Like, if you don't like it, and I'm not trying to be rude, I have friends like that think like this, and there's nothing wrong, and we're friends, and we can chill and hang out. You can move.
Yeah.
You know what I mean? Like, you get it on your TikTok, I'm sure, because that's the place that it always happens. I get it on my TikTok. People are like, Toronto sucks. And I'm like, bro, you could leave. Like, you know what I mean? Like, if you don't, and then I look like, this guy's from Toronto. I see all his pictures and his videos. They're from Toronto, but you're hating the city. You can get up and you can leave. No matter what, we're going to have people coming in. Values are going to continue to go up. You can either jump on the train now or later. Right? It doesn't matter. Whenever you're ready, I think you should buy when you're ready and you have all your ducks in order, but don't get it twisted. People are going to make a lot of money when we look back to September 2023. August 2023 is going to be a time where people say, holy crap, I'm glad I picked it up for, it won't be 200,000. I'm glad I picked it up for 700,000 because now it's worth, in 10 years from now, I think it's going to be worth 1.4.
Yeah.
Not because I'm smart, just because I looked at what history has done. Now, it might be in the 9-year mark, it might be in the 11-year mark, but on average, a $750,000 condo that you're talking about at Yonge and Egg is going to be worth 1.5 million. Now, that 1.5 million, keep in mind, gas is probably going to be $3. You know what I mean?
Yeah.
We're all living through this silent killer called inflation now. Now people are understanding what inflation is because we hear it so much. But you're going to see this double. It's just a matter of waiting a decade.
Yeah, exactly. So while we're in the same topic, because now there are deals out there. We got a WhatsApp group that we send Simon deals there, and there are crazy deals. And I'm looking at it, and I'm like, oh my God, if I could buy all of them, I would have bought them. Because things that I'm seeing there is like robbery, and people are willing to give you these deals. And not necessarily they're losing on it. I'll give you an example. I have a client that just purchased a 2-bedroom. And this is like, I've told a few people this example because I couldn't even believe it. This is a corner unit, brand new condo, 860 square feet in Toronto. I don't want to say the location, but this is 416 area code.
Can you just tell me if is it downtown?
No, I'll just tell you, like it's on York Mills.
Got it. Okay. So, okay. Not too far from
Yeah.
Yeah.
Corner unit, parking locker included.
Yeah.
Great view on assignment. How much do you think this market value right now for a unit like 860 square feet with parking and locker?
I would say at $1,000 a foot, so you're probably
Even including parking and locker
Yes.
at 1,000, it's a great deal.
Yes.
655.
Wow.
655.
Okay.
And the person who sold it still made a profit. I couldn't even believe it. They bought it for $495.
Holy shit. Okay.
They bought it back in 2016. It was supposed to be ready 2020. It got delayed and delayed and delayed. Now
and when is this being like?
the occupancy is in October.
Okay.
Yeah. So
All right.
right now, like a lot of people have moved into the building right now. This unit specifically hasn't occupied, but
And they're probably just looking for right now. They're just looking as of today. Correct me if I'm wrong, Nima. They're probably looking for their 20% down on the 400,000.
no, the financing they got the financing they got it at the 20% on the 655.
Okay.
This person specifically is paying cash, but like the builder.
No, sorry. I was saying the assignor was probably only looking for their original deposit now, and then the profit at actual closing, right? So, I mean, that's a steal for somebody who wants to pick something up.
We ended up paying because
you gave it all.
Yeah, we gave it all.
That's fine.
'cause
That's
the
just part
person
of
was buying it
negotiations.
cash.
I get it.
But the whole thing was like I mean, you get a lot of assignments. Like we did another one. All we did was we paid the original 20%, and this was in Regent Park. Purchase price at $500,000. 15% they've only paid. Client only paid the original 15%, and there was not much profit to begin with. And they took over the unit, and the seller was happy. He's like, they probably, like from what I heard, they bought a bunch of other units. They're like, okay, listen, let me get this.
Let me liquidate
close something else on it. And this person is ahead in this market. That unit right now in this market is hovering around 630 to 640. They bought it for like 535. So that's 95,000 ahead of the market. Given you're gonna have about $5,000-$6,000 development charges and just call it like another 10,000, but you're still getting deals like that. So this is why I think right now, if anyone's looking for any deals, they're out there. Don't be so pessimistic about real estate is not good. Look at rates are higher. How much are you paying more per year? Times that by 5, and look at the saving you're having, because we've run this math multiple times. And it makes a lot of sense on a lot of properties. I'm not saying everything, but on a lot of investor-friendly properties, it's good.
And look, what I'm telling a lot of my friends, family, clients is even if you don't have to with real estate actually close on something. Let me explain what I mean by that. Is that if you just want to get your feet wet, this is a great time to throw a bunch of offers out there. Just make sure they're all conditional.
Yeah.
That's it. Work with someone like Nima, knows what he's doing. Yep. The whole team over with you there, they know what they're doing. Throw in a bunch of offers. And this is a great time to see which seller is gonna bite. Not all sellers are on the market because they have to sell, but damn, are you gonna find a lot of sellers right now that do need to sell. Yep. And so as a buyer, as an investor, even as a homeowner, an end user, someone who's gonna live in the property, right now, I would throw offers all day long. I just don't have the time, but I would throw offers and look, especially if you are really ready to buy, then that's when you can actually strike while the iron is hot. Throw some offers out there, see who bites, and if you get something that interests you, close on it.
Yeah. So while we're here, I want to plug my WhatsApp group here. So we got a WhatsApp group. We handpick deals. We throw them in there. And these are the deals that make sense. You're buying them at a great value and there's great rental potential. So if you want to join it, send me a direct message on Instagram or just message me, WhatsApp me, phone number. But what I want to get to is that these deals that we picked out, people are buying them, and the rates, people talk about the rates. One of them right now got a mortgage, only I think got 2-year term. It was prior to the latest hike. So it was before July, it was towards the end of June. They got a 2-year for 4.89.
Wow, okay.
So you get a 2-year for 4.
Compared to what we're seeing now, that's really good.
What we're seeing right now, So right now it's like 6.39. So, and then after 2 years, you go and refinance it. Hopefully the rates are lower, you're getting it lower. But going to the strategy. So we're using a strategy with all our investors right now. So what we tell them, okay, join the WhatsApp group. and we're sending you anyways emails with the properties we think they're good, look at them. We don't even go see them. You tell me you like this one, this one, this one. I will tell you which one is the best. We'll go see all of them, and then we start throwing offers. Exactly. I always tell them, pick the top 3 after we see them. We give offers.
That's it.
And then we walk away, literally, because no one's gonna accept that offer to begin with. They're gonna sign it back. So we send the offer, we walk away. We send the offer, we walk away, unless we come back and we're reaching something. And I'm telling you, in the last 90 days, I've had probably 4 properties after we walked away, after probably a week, 10 days, the agent called back and say, listen, let's sit down and talk.
There it is.
And at that point, the investor is not emotionally invested. And I always tell my investor, don't be emotionally invested in this building, in that building, in the layout. If the rents for the comparable units are there and you're buying it, that's it. That's all you need. The numbers are working. I'm telling you, what you're saying right now with the offer is the key to success in this market. You have to go out there. You have to put the offer, because so many times I've talked to the agent, they're like, oh, send me an offer, I'm gonna get it through. You go there, you don't know what the agent is thinking. Maybe they just wanna show an offer to save face. You don't even get a sign back. But when you send the offer, the sign back that you get, there's so much value and there's so many messages in it, because the way they respond to you, the way the agent calls you back after that offer, then you know what the motivation is.
Especially after a week.
Yeah.
When that agent calls you back after a week and says, hey, let's sit down. Now you know they were at some point with their client, the seller, saying, okay, let's play a little hardball. Let's not go back.
Yeah.
And then a week later, the seller is, agent, where's my offer? Like, I need an offer. Call that guy back. Call that Nima guy back.
Yeah.
The guy who came in with that low ball. Maybe we can just at least get to the kitchen table and start having a conversation. We're very passionate about this strategy, and I say we as you and I, for your viewers and listeners, because when Nima mentioned there's a time in the market where it was going up 10% every single month, right? And then we saw 2020, I think it was, that when we saw a 22% increase for the whole year. Yeah. Within that market, within that time period, as agents, we're not happy about that, because when we're working with a buyer or an investor, we're in multiple offers, meaning we're competing against more people every single night. And there's 57 offers on a property sometimes. Sometimes there's 112 offers. Sometimes there's 6 offers. But generally speaking, in that market that we went through a couple of years ago, and we've been through it in the past, you're competing against so many people that when we're on the flip side of it, and you can throw a bunch of offers, it's why we're so passionate. Yeah. Because we know from a negotiating perspective, we get the leverage back. You as a home buyer, you as an investor have the leverage now. Why? Because we're just simple economics. We're actually in now in a lot of areas. We're in a very, very strong, balanced market, leaning towards a buyer's market. Like, we haven't hit 5 months, of months of inventory in any of the cities, but we're like 4 months and 3.89. I think I just saw in Brampton.
Oh, is it?
Yeah, right.
Wow.
And so we're starting to see. We're still not in a buyer's market, but because we're in a balanced market, we haven't seen this in a decade, like over a decade, right? We see 2 weeks of inventory.
That's what I've been always saying. Like, when it goes to balance, buyers think it's buyer's market, and they're like, oh my God, no, I'm not paying this. I'm like, buddy, you don't understand it. The numbers are still saying this is a balanced market. What you saw the last sale, probably you have to pay. But if there's no one else, go throw an offer, just see how it goes.
That's it.
Like, you never know.
Yep.
I mean, so many times we've done it. Like, I'm going to ask you for a success story too, personal or with a client, because recently we went in an offer date. No one was there. They said there was one offer, never got registered, nothing happened. They wanted well over 1.7 on that. I get a call, bring us 1.7. I get a call 2 days later, bring us 1.675. I'll get it through. We walked away. The agent called literally 8 days later, come back with 1.65, we'll have it, right? All of a sudden, like, there were 100,000 below what they originally wanted, right? So these are the real stories that are happening. So I want to ask you 2 last questions before we close it. I got a list of questions, but we're done with them.
You get 2 podcasters on a
I know.
podcast.
We got to do a second one. So with real estate, personal, let's just say, one success story that you're really proud of.
I think my first my first property. I bought it in 2008. Sorry, I said 2006. You know what? I actually think the one that I probably even did better on was in 2010, my first condo, the one that is in Stafford Street. Bought that for $339,000.
Pre-construction?
Nope, $339,000 resale condo. At that time, it was probably like maybe 2-3 years old.
300,000.
339,000. One
And that was
bedroom.
pricey still.
Yeah, 2000 and exactly it was 2010.
Yeah.
April 2010, I moved in, and so 339,000, one bedroom, locker, parking,
Amazing.
right at King West area, beautiful
Good
area.
old parking days with the one bedrooms.
Sorry.
Good old days with
Yeah,
the
when
parking.
especially that's 600 square feet, I think 625 square feet. Anyways, I've refinanced that property twice, purchased 2 more properties because of it,
Beautiful.
and I still own it. I own it today. It's probably worth 700. I'm thinking off the top of my head, maybe 680, 700. I still have a mortgage on it because I've refinanced it twice. So I've been able to pull out equity and buy more properties. Really quickly about refinancing that I didn't touch on before. I talked about the taxes. But look, you can do anything with that money. Like you can go to Niagara Falls and put it on black or red. You can pay off debt. You can pay off whatever. Like you can go buy a car. I personally am biased and say put it into real estate because it's going to create that long-term wealth, that generational wealth. But I think the biggest one for me, Nima, is that condo, man, because I've been able to refinance it a couple of times.
And a fail.
A fail. We did a flip, myself and my business partner. We did a flip in I just want to make sure.
And what we're talking about flip is a build or brand new build, or is it
sorry, we added a story to a property. 2016. Just want to make sure. Yeah, 2016. We did a flip. We were way over our heads. We didn't budget for it properly. It's a personal property that him and I did together. We couldn't finish it. Okay, we didn't have enough capital at that time. Now, I wouldn't call it a super fail in real estate, but out of all the stuff that I've done in real estate, this is probably the one.
And you sold it 2016 too?
So no, we ended up selling it. We bought it. We were going to add a story to it. We were in the process of doing it, but we just didn't have enough time to manage our GC properly. Luckily, the market did what it did back in 2016. It started
that it went up.
It went up, so we were able to sell it still for a profit, but it wasn't what it should have been.
Okay.
Overall in real estate, I've never failed, and I'll tell you why. Not because, again, I'm that smart. It's because I've never really sold property.
Right. That makes sense.
You get what I'm saying? The only one I sold was that one.
Yeah.
The only one that we sold because we got in over our heads because we're so busy in our day job that that's why I said, like, be careful, and you mentioned it, you did a great job of articulating it, which is like, don't get in over your head when it comes to flipping. We did. We got lucky.
Yeah.
Because the market did what the market did. But I've never really failed with real estate because I've never sold a property.
Amazing. Jas, that was amazing. I mean, like, one of the best conversations I've had so far.
Did I do better than Chris Lightham?
Chris was all stats. I loved it. I was just telling Justin, like, that episode was so insightful. I was sitting here, I'm like, oh my God. Like,
you should bring
amazing.
Chris back minimum once a year.
Yeah, 100%.
In my opinion. He likes to, I think he's the best looking guy in real estate. He's definitely the smartest guy in real estate that I've ever come across.
Yeah, the conversation with him has
awesome.
always been insightful, and his strategy, again, in real estate is long-term, which is ever since, because I used to build homes, and I always talk to him, and I'm like, do you build homes, flip? He's like, no, I just buy, rent, hold, whatever.
I'm not going to lie. I mean, I got 90% of my strategy, 90% of my numbers, 90% of my thesis around real estate investing is all from Chris Lightham.
Yeah, amazing. Jas, it was great. Thank you. Thanks for coming.
You're amazing, buddy.
Thank
You're
you.
Amazing.
Hope you guys enjoyed this. If you like this episode, be sure to click that subscribe button, share it with your friends, and click the link above to watch the episode with Nick Rizzuto about pre-construction. There's some good talks there if you're looking to buy pre-construction, as we discussed with Jas. Have a great day. We'll see you again.